Hello, everyone, and welcome back to the Daily MENA Market Call. I'm Razan Hilal, market analyst with Forex.com. Today is June 24, 2026, and major markets, are testing critical levels that may define the next major long term opportunities on the charts. We have the US dollar index testing 13-month highs, we have the dollar yen testing multi decade highs, and we have major charts at critical levels. We also have gold right now testing fresh 2026 lows in line with the bearish pressure across the silver chart. And mainly dominating chart right now is the bullish strength seen on the US dollar index as rate hike bets build towards the fourth quarter of this year. So we'll go over these key charts. Any chart that you'd like me to cover. If you'd like to analyze, please let me know. Happy to go over that. And of course, we'll be covering US indices, including the NASDAQ and local, the UAE MSCI, and the preferred stock, which is SALIC. The 1 minute disclaimer is up, and we'll be jumping to the charts, starting with the US dollar index. Okay, so over here we have the DXY on the monthly time frame where we currently have risks for a double bottom breakout over here. Now the first key resistance inside that we can look at for potential pullback risks, giving the stretch momentum seen on the daily time frame with overbought levels last seen or actually surpassing overbought levels seen March 2026, yet aligning with those levels that were seen in 2025. We might have potential slowdown or short-term pullback risk near the 102 mark for the DXY, and the next key targets would be the 102.80 and the 104.50, as these levels align with Fibonacci retracement ratios of the overall trend spanning or downtrend spanning between the highs of 2022 and the lows of 2026, where we can see that that first target aligns with the 38.2% Fibonacci extension near the retracement near the 102.80, and the next key level lies near the 50% near the 105. Apologies, I'm going to take that trend over here. Apologies, it's the swing between 2025 and 2026, highs and lows of 2026, where we can see that the current price action alignment potentially aligns with the 44%, which is the 102 mark, which was a previous high in May 2025. That can potentially align the chart with a potential short-term resistance. And the next key level inside would be the golden 618, which is near the 104.50 mark, where you can have potential higher probability setup for a pullback risk on the horizon. If not, we can have higher uh, probability for long-term bullish positioning on the US dollar index accordingly. Now on the downside, we're going to need to have a sustained breakdown back below that critical support barrier, so back below the 100.120 and back below the 100.20 to be able to shift short-term bearish forecasts on DXY, possibly aligning with the 99. We can see that on the daily time frame. We need to drop below the uptrending support since May 2026 and further below the uptrending support since January 2026 to be able to revert the forecast back towards a bearish tone. Uh, Below, as I mentioned, the 101.20, 120. Last one here would be the 99.30 before redirecting the focus back to the bottom bound of that uptrending channel since 2008. The trend is your friend. The framework will still lean towards a bullish bias, tilt until a sustained breakdown below that channel emerges. That would be the 95 mark for the bearish scenario on the DXY. For now, all eyes are on the bullish scenarios and the bullish potential for the DXY chart. Now, next up, we have the euro dollar, which is also at a very critical barrier, which was a resistance to price action in 2023, turned into a support in 2025, which is near the 113 to the 112.80 mark. Also aligns with the critical Fibonacci extension tool of the overall wave spanning between the high of 2021, the low of 2022, and the high over here of 2026, where you can see that alignment with the 23.6 and 27.2 Fibonacci extension ratios. And a sustained hold below this level would likely target the upper bound of that downtrending channel since 2008 near the 110 mark, where we can possibly have long-term accumulation opportunities on the euro dollar once again. Should we have a breakdown below the 110 mark and back within the bounds of that multi-year downtrending channel, then we can also have potential long-term forecasts, bearish forecasts extend on the euro dollar chart. And we can also see that monthly momentum is aligned with the neutral 50 mark from the upside, and we can see that we have oversold conditions on the daily time frame. Once again, raising the risk for potential short-term rebound on the euro dollar chart. If not, we might be still, the momentum still looks pretty steep. We can still unfold down towards that critical area. And if you look also at the dollar CAD chart and at the dollar yen chart, we can also see historical levels. Dollar CAD is at the is facing the 142.50 resistance, which is also the 27.2 Fibonacci extension of the overall trend spanning between 2021, 2025, and 2026. And the sustained hold below that above this level would likely target that multi or that nearly 10-year resistance spanning from the highs of 2016 near the 145.60 mark for potential pullback risk. If not, we can be targeting the golden 618 above the 150 psychological mark, possibly near 152 as the next potential target for the pair or pullback risk, correlating major dollar pairs and the US dollar index simultaneously on the chart. These are the upside scenarios. We're also aligning with critical levels on the charts right now that may present or may reflect potential short-term volatility or rebound opportunities. And we also have the dollar yen in the headlines, which is currently testing multi-decade highs that date back to the highs of the 1990s. And should we have a sustained hold for the dollar yen above the 161 to the 163 zone, we can possibly have a bullish breakout targeting the upper bound of respected uptrending channel since April 2025, and that's near the 167 to the 170 zone. And a sustained hold above that would likely target the 180 mark, lining with the upper bound of a respected uptrending channel since 2022 on the chart. Critical levels in sight that may open the path for long-term bullish positioning, taking it one key level at a time, but there's no doubt that we are at critical and historical levels across the major charts this week. Next up, we have the crude oil chart, which is aligned back with the $70 psychological mark. Crude oil is on its track to erase all the gains that were recorded on the crude oil chart following the beginning of the US Middle East conflict. If you look at the crude oil chart from a weekly time frame perspective, as I previously mentioned, the 73.50 mark was the golden 618 of the overall wave spanning between the highs of 2022, the lows of 2026, and the highs of 2026. And the next key target in sight would be the 786 Fibonacci, the 786 Fibonacci extension, which is near the 61 mark. Yet we might have potential slowdown near the 67 mark, as that level aligns with a multi-year support turned into a resistance since 2019 on, at least since 2019 on the chart in the following manner, before possibly targeting the 786, which is near the 62 mark respectively. I go over the crude oil chart in the Daily MENA call that runs Tuesday to Friday. You can definitely see this analysis as we're progressing through the days. And on the upside, we're going to need to clear out the 73.50 critical level once again to be able to rebirth forecasts for potential short-term rebound opportunities, potentially targeting once again the 76.20 level and further in the 78 and 80 psychological mark for a potential steep rebound risk. Should we have a close back above the 80 psychological mark and further above the 85 level, then we can be redirecting the forecast back towards bullish risk on the crude oil chart. For now, we still have bearish dominance in sight, confirmed on the weekly and the monthly time frame. On the daily time frame, we do have oversold levels last seen in 2025 that may also be opening the path for potential dip buying opportunities on the near-term horizon for the crude oil chart. Next up, we have gold. Gold is tracing steep drawdowns, risking a breakdown below the 4,000 psychological mark. Next key level I have for gold is the 3,930 for potential support, followed by the October 2025 low near the 3,880 mark. And a sustained hold below that level would likely extend the drawdown risk for the gold chart, possibly targeting the 3,650 and the 3,460. And this is the main target where we have a general market consensus on, with a continuation of gold's bearish rally, which was a previous resistance across over 5 months in 2025. for potential long-term accumulation opportunities on the yellow metal once again. And this level also dates back to a critical or aligns with a critical Fibonacci retracement ratio of the overall or the all-time trend of gold between the lows of the 1920s and the 2026 high. If we bring the Fibonacci retracement tool and place it between the lows of the 1920s and with the high of 2026, we can see that we're breaking down below 27.2% Fibonacci retracement, and we're possibly targeting the 3470 or 3460, which is 38.2%, and that previous critical resistance in 2025 for potential long-term bullish positioning once again. On the upside, we're going to need to clear out these previously respected support levels. We need to clear out the 4080 once again, the 4180, and further these key zones over here, which is the 4220 and further the 4370. These are the key resistance levels that may define either another pullback risk or confirm the long term or potential bullish rebound, definite bullish rebound on the gold chart once again, targeting long term and historical levels back above the 5K and the 6K and possibly beyond. Next up, we have the silver chart now testing the 58 mark. We also managed to have a clear breakdown below this year's lows. The 58 mark is the first potential support site level over here. Sustained hold below the 58 mark would likely target the 54 level first, which was a previous resistance between October and November 2025, and then further down towards 50 to the 48 zone. That level is a multi decade previous resistance, potentially turning into a support spanning from the highs of the 1980s, where we can have potential long-term accumulation opportunities on the silver chart once again. And on the upside, we're going to need silver to climb back up and reclaim the 61 mark, following the 63, 65, and 67 to be able to possibly build a conviction once again for long-term bullish opportunities on the silver chart once again. Next up, we have the Nasdaq chart, which is currently facing the 29,400 support. 29,200 support. We did manage to break the 400. Sustained hold below the 29,200 for the Nasdaq chart would likely extend drawdown risks towards the next key levels. You 28,900, 28,600, and further down towards, apologies, 28,800 over here, and further towards the ultimate target, which is 28,600 for potential dip buying opportunities on the Nasdaq once again. If not, we may be in for a deeper drop that may potentially target the 28,400 and the 28,000 psychological mark once again. Now, if you look at the price action over here and look at momentum from a daily perspective, we're still holding above the 50 neutral mark with buyers attempting to hold that bullish run on the Nasdaq chart that is currently weighed down by future AI valuations and the rate hike expectations. And if you look at it from a 4-hour time frame perspective, we can also see the rebound from oversold levels previously seen in June 2026. This is a 4-hour time frame. We might have potential short-term rebound opportunities, yet that extended consolidation below that key neckline that may develop into a double top pattern targeting the 28,600 mark is not something to look over to. And sustained hold or close for price action below that zone would likely target 28,600. So that would be below the 29,200 mark, as I previously mentioned. On the upside, it needs to reclaim back the 29,700 to be able to redirect forecast back towards the 29,900 and the 30,000 psychological mark first, followed by key levels between the 30,200 and 30,600 before we can extend record high forecast once again, at least another 1,000 point rally. Pay target 31,500 to 31,700 zone on the Nasdaq chart, respectively. Next up, we have the Bitcoin chart. Similar numbers as I previously mentioned to the Bitcoin chart, similar numbers to the silver chart. Yeah, Bitcoin is not at 58 yet. We're still holding, trying to hold above the 62,000 support. A sustained close for Bitcoin below the 62K may target once again the 60,000 psychological mark and the 59,000 yearly low. That may open the path, or may even target 58. That may open the path for another 10,000 drop, aligning with August 2024 lows, and that would be near the 49,000 to the 50,000 psychological mark, respectively. for potential long-term accumulation zone or bullish positioning on the Bitcoin chart once again. On the upside, we're going to need to clear the 65 and the 67K to be able to revert a bullish rebound and build the case for a bullish rebound on the Bitcoin chart once again, also potentially aligning with long-term and record high targets. So there are critical points right now we're facing on the charts that may redirect the overall direction towards the record highs, or we may be facing an additional corrective drawdown, and the key levels stand to confirm these marks. And momentum perspective, daily momentum shows extreme overbought and oversold signals, mainly across major dollar pairs and major currency pairs that prompt for short-term caution for potential short-term rebound and volatility as the longer-term outlook uh, gets more clarified. Now, next up, we have the UAE MSCI definitely reacting with the broader markets. As I previously mentioned, the Central Bank of UAE mirrors the policies of the Fed, and should we have a Fed rate hike, may have a Central Bank UAE rate hike as well. That could cap the overall sentiment across the equity market that is still in its rebound mode following the weight of the Middle East conflict. Now, we did reach the golden 618 on the UAE MSCI of the overall wave between March 2026 lows, April 2026 highs, and the recent June 2026 low. And we're going to need to clear these levels back again, the 20 mark, which is the 50%, and the 2040, which is the golden 618, to be able to divert the overall outlook towards the record highs. First, passing through the 2090, the mid zone of the respective channels since 2023, near the 2160 zone, and further near the record highs, the 2250 mark, before establishing a long-term bullish forecast in line with the potential inverted head and shoulders pattern breakout, extending a long-term bullish forecast on the UAE MSCI, possibly in line with the US indices in a positive correlation. Right now, we do have headwinds as a result of the rate hike expectations, and eyes will be on the next key economic reports for the US that may either ameliorate or revert these expectations in line with risks for markets pricing in the rate hike that also may lead to potential reversal after these extreme trends get fully priced in towards a rate hike. Finally, you have SALIC, which is the favorite stock in the region over here, which managed to rebound back above the bounds of that extended consolidation. We've been analyzing the breakout beyond that consolidation, along with the resistance risks near the 6.12 mark, aligning with the Fibonacci extension tool or the Fibonacci extension ratio, the 27.2% of the overall wave spanning between October 2023, August 2025, and the lows of March 2026. Apologies for lining this properly. And a sustained hold above this level would likely extend forecast towards the mid zone of this channel. So we'll be looking at the 6.5, 6.8, and 7. Sustained hold above the 7 mark would likely extend forecast towards the golden 618, 7.5. That's a new record. Next, we have the 8.26 and the 9 targeting the upper bound of that respective uptrending channel since 2022. These are the main charts and scenarios to watch. Of course, the dominant theme would be the US dollar index, watching the 102 first and the 102.80, and next watching the 1280 on the euro dollar for potential rebound or steeper breakdown, the 142.50 on the dollar CAD, and the 163 on the dollar yen, major zones that may either prompt a pullback, profit taking opportunity before clarifying the overall long-term outlook on the major pairs, and also, of course, watching the drawdowns across the gold and silver that may be on their track to open the path for long-term accumulation opportunities once again in the near term. Thank you for watching. Open to any question that you have. I'll be posting the recording of this webinar on our YouTube Forex Middle East page, and we'll see you in tomorrow's webinar.